please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Chartbusters. Well, this is a show where we'll highlight all the buzzing stocks of the day. I'm Nigel D'Souza, and with me today is Rima Tendulkar. Hey, Rima, not a great start. Well, everyone's expecting the moon over the weekend. That didn't really come about, and that's why, in fact, we have the Nifty that's under some pressure. But to be fair, even the other Asian markets aren't doing that great. You have the Kospi that's down, the Shanghai market was down, even the Hang Seng, in fact, was seeing some selling pressure. So in tune with what's going on in the globe as well, we are seeing some selling. Remember, we had a run of nearly around 250 points in the last couple of trading sessions on the Nifty. On the Nifty Bank, we had a 600-point rally. So, the markets are giving some bit of that back in today's trade.
Yes, absolutely. So snapping that two-day winning streak, a handful of stocks are actually in the green in the frontline pack, and it's the oil marketing companies, as you can see in the bottom of your screen, which are moving up. So HPCL, BPCL, IOC have all recovered from the low point of the day and moving up. And a couple of IT names like Wipro and Mahindra, where the valuations are more reasonable compared to a couple of the other bigger players like TCS as well as Infosys too, are moving up. Add in a few pharmaceutical stocks which are just managing to hold their head up in the green. To name Dr. Reddy's, Cipla. But let's first take you through all the top headlines at this hour, and then we'll get in a few trading ideas. It's the market. The rupee falls despite the measures announced by the government over the weekend. The benchmark indices trade weak. The Nifty Bank is down over 1.5%.
And in otherwise weak market, ID stocks like Wipro, HCL Tech Mahindra, they top the Nifty charts owing to the weakness that we're seeing in the Indian rupee.
The 10-year government bond yield is now hovering around that 8.17 mark despite RBI's OMO announcement. The rising yields hurt India, Bulls Housing Finance, and Bajaj Finance in trade as their borrowing costs will go up.
And Divi's Laboratories bucks the trend as Phillip Capital upgrades the stock to buy with a revised target of around 1,550 rupees. They spot a multi-year business opportunity from China's supply disruptions.
And PBR gains as CLSA retains a buy call on the stock, raises the target price to 1690, cites deal with aggregators, the strategic acquisition of Satyam Cinemas, a near-term positive.
Okay, all right. A quick check on the markets. We saw a bit of a pullback in today, but that quickly got sold into. Hindalco's move virtually to the low point of the day, so keep an eye out on that one. But I think a couple of these heavyweight stocks as well have seen some selling. The Nifty Bank, by the way, has moved to the low point of the day. So you'll just pull up the Nifty Bank. It's down 350 points. Axis Bank is seeing some selling, and IndusInd Bank as well has moved to the low point of the day. But I think Infosys, that one's dragging. And some of those IT stocks are gaining, but Infosys is not participating, and that's what's putting some pressure as well in the last few minutes. That stock has moved to the low point of the day.
There is that acquisition, and that acquisition, while it makes strategic sense, it's seen very expensive, especially compared to the recent acquisitions done in a similar space.
Okay.
So that's the reason why Infosys is not reacting positively, despite an acquisition which makes strategic sense, and that's because it's seen expensive.
Okay, all right. Interesting point there. So that's why Infosys is underperforming, while the rest of the IT pack, they're doing pretty well in an otherwise weak market. A few stocks in the broader markets, we are seeing a lot of selling, but Reliance Communications, I don't know whether there's some news out there, but that's recovered from the low point of the day. It was trading in the red. Intraday chart comes up for you on the screen. That's spiking up. And some of these PSU banking stocks as well. Just pull up the intraday chart. Reliance Communication, all of a sudden, big volumes on that one. That's moved to the high point of the day. And some of these PSU banking stocks, Allahabad Bank, Andhra Bank, Syndicate Bank, all these intraday charts really should come up for you. These stocks have suddenly started moving higher in the last few minutes. The smaller PSU banking stocks, Allahabad Bank, Andhra, as well as Syndicate Bank. So keep an eye out on some of them. But how do you trade the Nifty from here? We're at the low point of the day. We're down 110 points odd. Ashwini Gujral joins in. Well, Ashwini, what would the trade be? Second half of trade, do you expect us to see some more selling pressure? Or do you think 11,400, if the bulls can hold on to this mark, then we can get a bit of recovery from here?
See, at best, what you can say is, the IT index could hold up a bit. Rupee is already at 72.68. So the financials are ready to go to the cleaners. I mean, right now is a great time to get short on Bank Nifty. as well as many other financial stocks, including housing finance, banks, etc., NBFCs. So I don't think there is much change from where we were on Thursday. You had a couple of days of respite, and again we are breaking down. So in terms of preference, I would much rather go short on Bank Nifty rather than Nifty. But you know, the writing is on the wall. If basically the rupee breaks its low at some point, then I think the Bank Nifty could have a 450, 500 point type of day, because there's really nothing much standing in the way of the market on the downside. Consumer stocks are lower, financials are lower, 4 or 5 mid-cap IT stocks are up, but that's not enough, and the market looks poised for more fall. So having said that, HUL is a sell with a stop of 1620, target of 1550. Bajaj Finance is a sell with a stop of 2640, target of 2560. And Tata Elxsi is a buy with a stop of 1355, target of 1410.
Okay. Ashwini, any thoughts on oil marketing companies? So they're moving high as we speak. Brent is now just a tad below that $78 per barrel mark. Any trade?
See, these are very silly trades because, by afternoon, if Brent goes to 78, and the game is up. Basically, the market has downside pressure. Get hold of the weakest stocks and go short there for the highest odds trade.
Okay. All right, we'll get chatting later on in the day. So it's a good idea to short a couple of these financial names. That's the advice coming in from Ashwini Gujarat. But by the way, look at the way the rupee is depreciating. The intraday high on the rupee was 72.46, and already, in 45 minutes since opening, the rupee has seen a depreciation of close to about 20 basis points. Last week, the all-time low on the rupee was a level of 71.95.
72.
72.91. 72.91 was the all-time low in the rupee. Thereafter, on expectations that over the weekend we're going to get some big bang announcement, we saw the rupee appreciate to levels of 71.55, and since then it's been a fall of more than 1 rupee. And even on an intraday basis, the rupee has not been able to hold on to those little bit of an appreciation that we had seen. There's another leg of downward pressure in the market. So just take a look at the key indices. The Nifty is now down close to about 130 points. A slide in the last few minutes. The Sensex is down close to 450 points. There is a lot of pressure on the financials. So the Bank Nifty is down close to about 400 points. In terms of individual names in the large cap space, Sun Pharma has taken a knock for the worse. So Sun Pharma is now down close to about 1.5% in the financial space. You have Bajaj Finance, which is weakened close to about 2.5% as we speak from its 52-week high, which it hit very recently. Bajaj Finance is now off close to about 13%. So yes, despite the finance minister Arun Jaitley announcing measures of the weekend to tackle India's worsening macros, the market has seen deep cuts across the major indices, and the rupee has slipped further. Earlier today, we'd spoken to a whole host of market watchers to get a sense of what they made of the government measures, how effective they will be in stemming the fall of the rupee. Let's hear out what they had to say.
Definitely, we are a part of an emerging market scare or fall, or so to say. But at the same time, we do have our own issues, which is the current account deficit. Based on whatever measures which have been announced by the government, I would still say, since the action was a little underwhelming, maybe 72 to 72.60, 72.65 kind of range for the day. The range for the 3 months, I would presume, is could be in the region of 71.5 to 72.5 to 73, depending upon how EM currency stabilize. It seems that we are now going towards a period when Reserve Bank would probably want to keep liquidity tight rather than try to achieve neutral liquidity. And I just wanted to make one point on the FCNRB window. I actually feel that it is a measure which should possibly be last on the line. And also, I do expect some kind of import restrictions to come on items like electronic items as well as. So those are the things which are positive to look for.
I think the measures were somewhat underwhelming given the expectations that had built up. But I think it has also created sort of a fuzzy expectation that more measures are on their way. So this, this tantalizing bit that Mr. Jaitley has, given us might just keep the hopes of more effective action alive, and that might work as some kind of a floor for the rupee, facility for bringing fresh capital, fresh money in, is through a more targeted program and not just lifting some regulatory curbs, was the need of the hour. I believe that they won't hike the rate. I think they'll just go entirely by the headline print, and the fact that, at least in the near term, the oil price effect is being mitigated by softer food prices will sort of make a case for a data-dependent move, which certainly just doesn't justify a rate hike. And I think the RBI will sort of keep seeing how the government responds in terms of specifics, in terms of the import curbs, and so on, before moving on the rate front.
Market expectations of the measures had probably were too bullish. People were expecting a lot, which was probably not warranted at this point, and that is why there was a little bit of disappointment with the measures that were actually announced. In addition, there was also news that Trump is still going to go ahead with the $200 billion of tariffs on imports from China, despite the news of talks earlier in the week. So I think combination of those factors, clearly rupee is likely to be under pressure as a result of that.
All right, then moving on. Goldman Sachs has downgraded India to market weight from overweight. Nimesh Har joins us to run us through the details of that particular report. Nimesh.
Thanks, Nigel. So, Goldman Sachs was having an overweight stance on India ever since 2014, and only now they feel like, the risk reward is not favorable, and they've cut the weight to market weight, or so to speak, a neutral weight from overweight. As I said, they basically feel that the risk reward is not favorable, essentially because of elevated valuations, potential slowdown in terms of economic activities, and the election concern as well. Remember, we'll have at least 3 state elections and a general election in the next 12 months. So that's something which has started to playing out in the minds of the investors as well. And typically, India's premium to the MSCI EM has now crossed 58%. And typically, if that happens over the next 3 to 6 months from then on, India tends to underperform. So that again is the reason why they feel in the near term there are headwinds for Indian markets not to outperform. In terms of sectors, surprisingly they've upgraded I2 to an overweight. They remain neutral or market weight on pharma. In terms of other sectors, they continue to be overweight on private banks and metals, but they've dramatically cut down their weightages on industrials and auto stocks from overweight to market weight. So essentially, they have a Nifty target of 12,000, which means a further upside from here on. But from being overweight for last 3-4 years now after hefty valuations and the fact that India market currently commands a huge premium to the MSCI EM, they feel that India will really underperform, and that's why they've cut from overweight to market weight at this point in time.
Okay, thank you very much for that. Another stock which we should focus on is Manappuram General Finance, because Abhishek is just alerted that there are reports which suggest that the Reserve Bank of India has not accepted the proposal of the company to acquire an 85.4% stake in Indian School Finance Company by Manappuram Finance. This company that they were looking to acquire is a Telangana-based non-banking financial company which basically provides loans to the educational institution, teachers and other education sector loans. And Manappuram General Finance was looking to acquire this company because it is a niche sector providing loans purely catering to the education sector. And now reports suggest that the RBI has not accepted their proposal for the acquisition of this 85.4% stake in Indian School Finance Company. So it's a setback for the company and the stock is reacting.
A bit of a problem today because any kind of increase is getting sold into. Let's run you through the option space and tell you what's going on there. First, 11,600 call. Now, that's the one that has been seeing addition. Today as well, it's added nearly around 5 lakh shares approximately. So the bears believe that they can write this particular strike. So just keep an eye out on that one. That's the 11,600 call. But the problem now is we are seeing addition at lower strikes. The 11,500, that's the most active. That's added closer on 10 lakh shares. So definitely the bears believe, yes, we can go ahead. We can protect the 11,500, 11,550 odd mark. But as the market fall is continuing, we're seeing the action shift from 11,600 call, 11,500 call, and now it's come down to the 11,400 call. So, the writing is shifting lower, telling you that now, in fact, the bears are getting more and more confident that they can definitely defend this mark. Between those 3 strikes, they've added more than 20 lakh shares. So just keep an eye out on that front, because very aggressive call writing is indicating that the bears, they believe that they're fully in control as we speak. We get back to the markets for the time being as promised. We'll talk to our management. We have Arihant Superstructures. That's the stock on our radar on the back of the company entering into a new project based on development management model in Panvel. To discuss this and more, we're joined by Mr. Ashok Charger, the CMD of the company. Good morning, Mr. Charger. Thanks so much, sir, for joining in. If you could run us through these details of this project management model that you've got into. I was looking through the press release. They're saying that you will not be, responsible for all the approvals and the financial regulatory approvals that should come about. But if you could give us a sense of what is the revenue potential of this project and what is your management fee as a percentage of these revenues?
The revenue would be something around 80 crore rupees.
Okay.
Plus, and ranging between 80 to 85 crore rupees. And the management potential is 13% of the project cost.
13%?
Yes.
Okay. And the kind of margins you will enjoy?
We are on a fee-based model. So our revenues are fixed, and the company will not be liable for RERA or any regulators.
Right.
So it is an no cost and no loss model, where we would use our expertise to sell and construct.
Right, Mr. Charger, just to get these details very clear, the total project revenue that the project will receive is 80 crores, or the company will receive 80 crores, Arihant Superstructures?
No. The project will receive 80 crores as a top line.
Okay, and you will get 13% of that, which is about 10 crores.
We would get 13% of the project cost. So the project cost would be as per RERA, and that would vary between around 6 crores and around.
Okay, so you get 13% of 6 crores.
No, we will get 13 crores of the project cost, which would amount to
around 6 crores.
Okay, you'll get close to about 6 crores. Okay, and this would get recorded at the operating profit level for the company?
Yes, it would be at the holding company level, Arihant Superstructure.
Okay, all right. So also, Arihant Amber at Panvel, that's another project. That's your own project, right? Have you launched this project? What's the realizations you're looking at in this particular project? And when do the revenues start flowing in?
This is a small one with the ATIB approval. And the revenue would start flowing up something around next April 19.
April 19, okay.
April 19. And the small one, we would be able to finish it off within a span of less than 24
Revenue potential, sir?
Revenue potential would be around 20-25 crores.
Okay. All right. Mr. Charger, just shift focus. There are reports which suggest that construction in Mumbai has come to a standstill because the BMC is not clearing. So there is lack of clarity on the development control regulation. Engineers are not processing building files. There are delays in approvals. All this is for the city of Mumbai. If you could just confirm if this is true, and will it have an impact on the company?
Now, our operations are in Navi Mumbai. That is MMR region, and MMR has MMR is not affected by the 2034 DCR of BMC.
Okay. But are you aware that in Mumbai, these 2034, these DC regulations are impacting construction?
Yeah, it is impacting, with especially when revised approval would take place, when ongoing projects will have to again visit the BMC office for extended approval.
Do you have unsold inventory, Mr. Charger? How's demand looking on ground?
When the price is tagged right and the marketing is taken to a level of fast-moving consumer good, what we see in future, the real estate also would be looked as
Mr. Charger,
not only as an asset model.
So what we're asking you is, do you have unsold inventory that you're sitting on?
Yeah, we have unsold inventory of around 250 flats across the company, across all 16 projects.
And that would be in value terms?
That would be in value terms around 100 crores.
Around 100 crores.
What are the realizations like? Are they trending down because of high inventory?
No, the realization has seen up and 2 to 3% upside margins right from April to today also.
Okay. Final question, Mr. Charger, before we let you go. What are the kind of sales volumes you're looking at for this year? I think last year you did around 840,000, if I got that number right, with an average realization of around 4,000 rupees per square foot. For FY19 and 20, what are the targets you'll have in mind?
We'll try to pitch it up around 1,000 plus flats, and within CAGR of around 20-25% plus.
Right. So that would be what in terms of the total sales? 840,000 is what you did last year. Can you do 1 million square feet in terms of sales in FY20?
Sure. Yes. And that would be something around 400-450 crores.
Wonderful.
Okay. All right, Mr. Charger, we'll leave it at that. Thanks so much for joining in. So that's Arihant Superstructures. For the markets, it continues to bleed red, so still down more than 1% on the benchmark indices. Banks are taking it on the chin, underperforming the Bank Nifty, down close to about 400 points. And heavyweights like Bajaj Finance, Bajaj Finserv, ICICI Bank are all under tremendous pressure. And the advanced decline ratio continues to be weak, one stock in the green.